Hello, friends. Welcome back to Block Bytes. It's time for our weekly crypto news recap. Let's start with the market. The market is down. A lot of the tokens are in red, as you can see. We see a little bit of green here and there, Lido, Frax, and others. But overall, it is a bearish market, and it is more red than green than the previous 2 weeks, at least. Yeah, so a lot of the tokens which were up last week, like FTT, I don't see RPL and TON somewhere, must be somewhere. TON here, they are in red now, obviously, for obvious reasons. They saw a really massive price rise, and now I think everybody is selling them. So there's nothing much to add here except a sea of red. Let's move on. Another news when it comes to crypto regulations. Cyprus has all of a sudden come into the picture and said that it is going to implement some really tight crypto rules and regulations. It plans to modify its prevention and suppression of money laundering law, and add strict penalties for CSPs, which are cryptocurrency service providers like exchange or even wallet providers, or things of that sort. Any service provider for that matter, on and off ramps also probably. So what they need to do is they need to register with the Securities Commission of Cyprus. And if they don't do and continue to work, there will have to be stringent penalties, as we said. A hefty fine up to 3,500,000 euros, and an imprisonment of up to 5 years. So yeah, we'll see more and more of such news coming up as we go forward. As you know, there is some renewed interest when it comes to regulations of crypto assets and cryptocurrencies. There is another news that we will look at today. But I think going forward, we will see more of such news coming from different parts of the world. Next. Okay, this was an interesting report from Elliptic, which is an on-chain security analysis service provider. In a paper or in a blog title, How Terrorist Groups Are Exploiting Crypto to Raise Funds and Evade Detection. It has come at a opportune time, in the sense that we know that there is a conflict going on between Hamas, the terrorist organization, and Israel. And this this blog actually says that Elliptic has found major terrorist groups like Al-Qaeda and Hamas using crypto assets to fund their agenda. So they do something known as public fundraising as well, in which people are asked to donate, obviously, and that donation goes to a public crypto wallet. And it could be from a few hundred to over $1 million in crypto has been raised so far. Major terrorist organizations like the Al-Qaeda and the Al-Qassam brigades have collectively raised more than $3 million from public crypto fundraising campaigns like this. Right. So Elliptic is keeping a track on this. And if you go down, they've actually given where these wallets are and how the money is flowing through and around them. And not just that, they're also taking it a step ahead and investing and trading in DeFi. So this is another reason why governments have to, keep a track of crypto transactions, illicit activities, promoting terrorism, money laundering, trafficking, you name it. Everything happens. Everything is going on through crypto. But yes, so this was a news that I thought I'll share with you, given the timing of it. In a piece of good news for some, for me it is good as well. THORSwap, which we discussed last week, had temporarily paused their application because, again, they were involved in moving of illicit funds, have come out and said that they will start their services soon, after adding something they call address screening capabilities in the app. This appears to be something just like Tornado Cash did, in which certain wallets will be screened, and if they are found to be indulging in illegal activities, they will probably be blacklisted from the application, which I feel is a good move on their part of the app, because if they wouldn't do it, then someone else will come hard. By someone else, I mean a government or a regulatory body would come hard and force them to do it, right? Now, as I said, certain people are not happy, especially this guy over here, which is never happy with anything. For him, it is either black or white. I mean, either you can be 100% free or not be free at all. So, nevertheless, obviously, he feels that this is a step that THORSwap should not have taken. And he can have his perspective sitting behind a keyboard. Obviously, he has not created the application, or he probably doesn't even use it, or even if he uses it, good that he is in no way empowered to make decisions for the app. But this is going to happen, right? On a different note, we will see more and more of this happening. And I'm glad that the applications are being proactive. We have seen what happened with the Tornado Cash episode, right? If you don't help the regulators, you will be forced to comply. So we don't want another repetition of the Tornado Cash episode. And I am happy that THORSwap has been taken this visionary decision in a way, and they've taken a much more proactive decision. So I'm glad that they've taken this. Moving on, another report on illicit activities this week. It's been about illicit activities and illegal activities. So this was an interesting new article, a report that came out saying that illicit activity in Ethereum staking is low, but it's still enough to spook big finance firms. Now, this is another reason why big finance firms are not that keen on Ethereum. Probably another reason why we don't see a lot of activity happening in the recently launched ETH futures ETF. But I mean, if you go down this, it talks about gives certain details and talks about how this could be between 0.05 to 1.5%, which may not seem much, but it is still much. I mean, this is probably on the lower side anyways. I'm sure it's more than that, right? So it is not good news. But then again, we know about this as crypto, as responsible crypto users and advocates. I think we are aware of this problem, and it is good that it will be good rather that we see more and more steps being taken by the applications and by the protocols in order to counter the use of crypto rails for illicit activity and money laundering and you name it. So yes, so that is what you can go through this this report, but again, nothing out of the ordinary, to be honest. Moving on. Okay, a piece of good news. MasterCard recently enabled tokenization of CBDCs across blockchains. Now, this is something that they had already planned for. And why is this important is because, you have the crypto world in which you have stable coins. That is the primary means of finance in this world. And then you have the private Web 2 world of banks and institutions. You don't have stable coins here, but you have CBDCs. Now, both of these systems are separate systems. So there needs to be a way in which CBDCs and stable coins can inter-exchange or talk to each other. So this is what this experiment is all about. And what they essentially did was, so MasterCard conducted a live transaction in this scenario. The holder of a pilot CBDC on this side wanted to purchase an NFT on Ethereum on this side. So the CBDCs were locked here, and a wrapped version of the CBDCs was created on the public Ethereum blockchain, and that was used to then purchase the NFT. If you are familiar with how bridges work in Ethereum, they work pretty much on the same fundamental of lock and mint. So this was a successful pilot, and it takes it one step ahead towards the integration or the merge of the Web 2 and the Web 3 world. Moving on. Okay, now this one's an interesting piece of news. Bitcoin network we could see, smart contracts on Bitcoin network. Now, why is this interesting? Well, because the Bitcoin network has kept itself away from any kind of changes to the protocol. They want the people who are controlling Bitcoin, they want Bitcoin to remain as it is, as a store of value, as an asset class. They want to stay away from any kind of DeFi nonsense that happens on Ethereum or on other cryptocurrencies. But this particular paper introduces a mechanism called BitVM, with which you can have smart contract capability on the Bitcoin network without actually changing the network or the protocol itself, which is very innovative. So now we'll have to see how the people react to it. Obviously, those who are hardcore Bitcoin maximalists will not be happy with it. But it'll be interesting to see whether this is actually taken ahead and implemented. So I found this very interesting. If you are technical and you want to read through it, I will obviously have a link to this news article from where you can drill down into more details. Next. Yes, not a big news, but since it's like a milestone that has been achieved, I thought I will share this with you. The G20 group of countries have adopted the global roadmap. As you all remember, G20 this time under the leadership of India came out with the IMF and FSB synthesis paper, which basically gives an entire framework of how countries should look at regulating crypto and digital assets. And with this milestone, what they have done is all of the countries which are part of the G20 now, including the African continent, which became the newest member, have ratified the framework and said that, yes, they have stamped it and said that they all agree to it and they will adopt it. They will take it forward and create their individual set of regulations based around the recommendations given in the framework and in the document. So this was, I felt, an interesting or an important milestone to have achieved. And as I said earlier, I think the next year and subsequent years will be much more interesting from a regulatory perspective, as we'll see more and more news items with countries as and when they come out with regulatory rules and regulations for cryptocurrencies in their countries. So yeah, keep an eye on those, and hopefully India does that too. I think, yeah. Okay, now bit of a bad news. Polkadot has laid off 300 employees. This is not good news, obviously, for Polkadot. Now, the interesting part is that the Parity Technologies, which is the developer group of Polkadot. That is where these employees have been asked to leave, 300 of them, which is a big number. And why have they done that is they've said that they do not want to become a bottleneck slowing down the growth of Polkadot, which is hard for me to understand sitting here outside the with no any kind of understanding of the environment and the dynamics of Polkadot. But I don't know what that means, to be honest. But I'm sure that it's a valid reason. And nevertheless, this is not good news for Polkadot, as anybody can imagine. I was just looking at some metrics. Obviously, the price has gone down, which is not surprising. And the market cap has gone down with the price. Revenue of Polkadot has been on the downturn since March, mid of Feb and March somewhere. It's in a downtrend, which is not at all good. And maybe this is part of the reason, because if they're not making enough revenue, then it's time to, reduce the headcount. So active users, if you look at active users also, daily active users, they pretty much seem to be constant. The monthly active users have actually gone down drastically. So at the start of this year, they were almost 250,000 users. And now after this recent drop, it is come down to 3,500. That is more than 1/10 of a drop, or not really 1/10, around 1/10 of a drop, which is huge. Not a good news for Polkadot, obviously. So let's hope they come back to track with this little bad news for them. Let's move on. The last news of the week of that I found interesting was, we talked about StarsArena in the previous news recap last week. StarsArena is a social finance app on the Avalanche blockchain, which when it launched was a massive hit, just like Friend Tech was on Base. As a matter of fact, StarsArena is a fork of Friend Tech, but then it got hacked for $3 million. And now the good news is that they have recovered the entire amount back. They were able to communicate with the attacker and convince him or her that to return the funds back. And in return, the attacker got 10% as the bounty, right? Which is always a good sign. So good news for StarsArena. But again, as users, like retail users, it is always safe to not fall into the hype of any new app that has come in. Even Friend Tech got hacked for not that big an amount, but I think it was like $500,000 USD or something like that. So be careful out there while using any new app or wallet, because it might have some bugs in it, and in this case, the users were lucky that they were able to get the funds back. Most of the times that doesn't happen, right? So yeah, so with that, let me end this week's crypto recap. I hope you liked this this week's recap, and I will see you next time with another session. Bye.